ultimately, I do think that this cycle top is in probably for crypto. I do not see us getting back to 120, 125 anytime soon. I think, 100K is probably very good resistance for the time being.
Break the cycle of exploitation, break down the barriers to truth, break into the next generation of privacy, break free. Free to scroll without being monetized, free from censorship, freedom without fear. We deserve more when it comes to privacy. Experience the next generation of blockchain that is private and inclusive by design. Break free with Midnight. Visit midnight.network/break-free. CoinDesk Bitcoin Treasury Month is brought to you by Genius Group, a Bitcoin treasury company listed on the New York Stock Exchange under the ticker GNS. Genius is building toward a 10,000 Bitcoin treasury and just launched Genius Academy, featuring courses from Saifedean Ammous and more. Start learning for free today at geniusacademy.ai. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. Looking for the best way to unlock your crypto's liquidity? Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Take out a crypto-backed loan in the Figure app today.
Hello and welcome to Markets Outlook from CoinDesk. I'm Andy Baehr from CoinDesk Indices. I'm delighted to be joined by Beimnet Abebe from Galaxy on this Monday where things seem to be stabilizing a little bit, but we've been tricked by last leg false floors before, so it's great to get an update on where the markets are. It's good to see you, Beimnet.
Thanks for having me.
We were talking a little bit in the pre-show about how, with some degree of humility, market observers are trying to diagnose what's going on here. I think you came back with a lot of very seriously considered and thoughtful ideas. For folks who are wondering why there's such a big hole in their crypto portfolios now, what are your top three kind of macro reasons?
First and foremost, I think there's a tremendous amount of profit taking that's taken place in crypto. In Bitcoin in particular, it's an asset that's gone from 20,000 a couple years ago to a high of 120,000, and so we've seen a lot of profit taking from the whale community. You can see that on chain, and internally here at Galaxy, we've definitely seen some whale selling. So I think profit taking is one. Two, I think that there's a technical breakdown that's occurred where you're below a lot of key supports, and so folks are latching on to that. And then three, I think the main concept that I think folks need to really consider is like where is value in crypto? It doesn't just necessarily go up all the time, and so I think folks have genuinely reassessed where they think like good value is in crypto, whether that's in alt tokens or it's in Bitcoin. I think the kind of value area for a lot of marginal capital that's going to get deployed in the space is a bit lower. The fourth thing I would just add is just general fatigue. The DAT frenzy that you had over the past couple of months was a frenzy, and then it led to significant capital losses for a lot of investors. I think most DATs are now trading, close to MNAV, if not lower, and that's with prices lower from where these, DATs recently purchased the underlying crypto assets, and so there's a lot of investors that are hurting, and then. To go along with this, kind of value and where losses are, I think just naturally folks are more averse to losses than they are to wins, and just dealing with the human value function, like a dollar loss feels a lot worse than a dollar gained. And so when you've had these DAT positions lose, and when you've had these alt tokens lose, like it really makes folks uncomfortable, and it really kind of begs the question, like is this L1 token worth $10 billion? Is there real, value accrual? Is there, a real long run thesis? And the question is like, how much of that has already been baked into the current price, right? And I think the crypto is an asset that since the election has had a lot of optimism, baked in, with new ETF products that are allowed to launch, the DATs that are being approved left and right, and generally the regulatory scale back that you've had in crypto, like a lot of that optimism got baked in. And so the question is like, is there real reason to chase further upside when all of that optimism had gotten baked in?
Yeah, no, it's helpful, and there's a lot of solid points there. I want to drill down on the value question a little bit, because especially when you think about Bitcoin, and then you think about layer one smart contract blockchains, very different idea of how to construct value. Are you thinking about value on a price where these things were accumulated basis, or how are you thinking about value? Is it key points where Michael Saylor might have bought, or what's your sort of, I guess, top down construction of value, or when does the value investor step back in?
I started my career in technical analysis, and so I'm a big fan of technicals. And one of the things in Bitcoin is the 200-week moving average. Basically, anytime you've ever bought a dip to the 200-week moving average, you made money. You might have had to hold for a couple of months, but it has a very high hit rate of working, and traditionally in markets that trend higher over time, buying at the 200-week or 200-day moving average has historically been, a very profitable strategy, whether it's the S&P or gold or other kind of, financial assets. And so there's definitely value. The question is, will we get there? And then in terms of, kind of the alts and generally like a lot of the other assets in this space, technicals aside, I think value is when, there's mass capitulation, when there's a ton of selling flow and max, kind of pessimism is kind of where you really, unlock that long-term value. Otherwise, you're kind of playing the game with everybody else. But when you have great entry and when you're one of the last buyers to step into to a market, your expected value tends to be pretty good. And so, that's kind of what I'm waiting on in terms of like what the value area is. And crypto is kind of when you see those mass capitulation events. And, one of the things I didn't touch on earlier that I think is super relevant to now is you did have October 10th liquidations happen. And what that did was basically liquidate a bunch of levered long traders in crypto. Market makers were severely damaged as well. And so the liquidity profile in the market has totally kind of changed. And since then, you've kind of had the fallout. And you had things like Atom trading at zero, and that was very technical. But what you kind of want to see is like a very fundamental oriented like flush out, right? Where folks are capitulating because they've kind of thrown in the towel on their kind of long run thesis, and that's kind of where I think you'll get to in the next call it 6 to 9 months.
You bring up the 200-week moving average, and looking at the sell-off, looking at the drawdown, both in Bitcoin and in indices like CoinDesk 20, it really did accelerate in a way which looked trendy. In fact, trend signals on the downside worked extremely well, almost as if you were just drawing numbers to demonstrate a successful trend strategy. Do you think that acceleration, especially motivated by October 10th, was reflexive? In other words, were people trading the trend and therefore they were kind of manifesting a trend outcome by trading trend? Or was it really kind of emotional capitulation, which is more of a symptom than a strategy?
Yeah, no, I completely think that there was some reflexivity to this market. I think there's a lot of folks that know that, when you get a technical breach, there's a lot of folks that are forced to unwind the risk. And if you go lower, there's certain liquidation levels that are visible. And then, you've got, margin calls, and then, the loans on top of the exchange liquidations that can take place. And then in theory as well, like the lower you go and the less liquid and the higher the vol, structurally you have to have like a smaller position if you're running like a formal risk book. You touch on the DATs as well, where, if their MNAVs dip below parity, that in theory they should be net sellers or at least not net buyers. And so you did have like this kind of like reflexivity to the market. And it totally makes sense because you had that same reflexivity on the way up. And so I think it's a combination of folks, understanding that there's reflexivity to the downside and piling onto the trade. And that kind of causes that emotional capitulation as well. So it's a bit of both.
CoinDesk Bitcoin Treasury Month is brought to you by Genius Group, a Bitcoin treasury company listed on the New York Stock Exchange under the ticker GNS. Genius is on its way to hodling 10,000 Bitcoin in its treasury while educating the world on a Bitcoin-first future. Genius has launched the Genius Academy with courses from the likes of Saifedean Ammous, author of the Bitcoin Standard, Natalie Brunell, and many more. Start your Genius learning journey for free today at geniusacademy.ai and earn Bitcoin-backed gems. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. Looking for the best way to unlock your crypto's liquidity? Figure is exactly what you need, being the largest non-bank mortgage lender in the US with over $19 billion unlocked on their lending platform. Explore their industry-low crypto-backed loans at 8.91% interest rates at 50% LTV. They differentiate themselves by offering decentralized MPC custody, which protects your crypto ownership in a segregated wallet. They've also recently launched liquidation protection, which protects you from liquidation during large price drops. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit their app or click our link below to take out a crypto-backed loan with Figure today.
We kind of got to the peak of maybe having a dozen different ways to trade Bitcoin, right? Between DATs and ETFs and options. And we have many different options markets now, many different spot markets. One would hope that you would have enough different types of users and a number of different types of motivations and risk profiles and access points that you would have had some diversification of risk, as you just said, and as I think we're agreeing that it didn't matter. Everything just kind of became highly correlated. So looking ahead, you guys have a huge trading desk, you have a big options desk. It certainly felt like Bitcoin's option activity felt more equity-like than Bitcoin-like this time around. What can people expect going into the next year where none of these ways of accessing Bitcoin and digital assets is going to disappear, probably will proliferate? Can we expect better liquidity or more diversified use cases or book positions to help smooth the ride a little bit, or are we still going to have these kind of flush moments where everybody sort of backs off at the same time?
I think high level, the liquidity profile in Bitcoin option space is only going to improve over time. The IBIT market has already shown significant kind of improvement on open interest, bid offer spreads, et cetera. And so, that's going to be a pretty important tool going forward. And I believe the OCC limits were also moved higher for the IBIT contracts. And so I do think that that's going to be a trend that continues. And the other thing to add on to that, I do think that Coinbase's purchase of Deribit and really kind of institutionalizing Deribit in a way that hadn't been before will also kind of help enhance the kind of liquidity profile in the marketplace. But nonetheless, like part of the issue outstanding is that you don't really have a diversified marketplace for alt tokens, right? So you do have an options market for Bitcoin that's robust, ETH to a lesser extent. But as you go further down the risk spectrum, like there's a very limited set of liquidity for the other positions in markets. And so if you're a diversified crypto hedge fund that has a 30% allocation to alts, or you're a crypto venture shop and you're very allocated to alts, you don't necessarily have those clean and convenient ways to hedge. You can buy ETH puts to hedge your venture portfolio, but you can't guarantee that they're very correlated. And so a token generation event that you thought was going to launch at 5 billion might now launch at 1. And that's a huge reduction in price. But if I bought ETH puts, there's no saying that I might have made money on that, or I might not have. But it's not a clean hedge, so it doesn't allow you to kind of move as nimbly as one might like. But I do think, yes, like the fact that there is liquidity and there's huge liquidity providers in the Bitcoin option space should allow portfolios to be managed in a more easier and cohesive way. But Bitcoin's not the only part of the crypto story.
Yeah, I couldn't agree more. I don't want to force you to declare whether you think the fever has broken and a floor is put in, but is it interest rates and Fed that's really going to try to break the fever, or what other kind of catalyst could there possibly be to, I think, settle the market down and allow people to start building positions back up?
I think there's a huge fallacy around interest rate expectations. What I mean by that is the interest rate curve, like it's a curve, right? So there's always expectations built into, even if you don't go in December, like the January odds are baked into the market, and so is kind of what's expected for terminal rates. And so one meeting can kind of like dictate tone, but over the long run, a lot of like rate cutting is already baked into the market. And so I don't really think that a slightly hawkish FOMC with a cut, or a no cut, like it really should move that markets that much. What I do think is important though is kind of the underlying trends in the data. And what's informing the Fed. And if you look under the hood of the last non-farm payrolls, like there's some very concerning things. Obviously, the unemployment rate, ticked up to 4.4, which is elevated. But the other thing is a lot of the job additions came from second jobs, right? And from sectors that aren't, high paying, white collar, that type of stuff. And then when you look at like things like, youth unemployment or fresh college grad unemployment, like I think the youth unemployment rate's above a 10 handle now, right? If you're 20 to 24, I think it's a 10.5% unemployment rate. And then, and if you look at like other things like job postings, and if you look at the amount of layoffs that have been announced for the month of October, I think the October layoff figure was 152,000 jobs that were publicly announced. And so when you really dissect the labor market, I think it's telling you some very concerning things. And so I do see the Fed kind of pivoting to a more dovish stance. Now the question is, will that kind of help the market on the go forward? I think that's less relevant. What's more relevant in my head is kind of the structural flows in equities, right? Like you had a bout of de-risking in the last week, but I do think you're kind of, to quote, Scott Rubner, who's like the main flows expert on the street at Citadel, I think you're kind of in the 8th to 9th inning of that momentum unwind. And we do know that November is a seasonally very strong month for equities. In addition, you do still have massive stock buybacks by a lot of the tech names, and retail has continued to buy the dip very aggressively. So I do think you have a setup for risk, like broader equity markets rallying into year end, that's more structural in nature rather than fundamental, and that should generally be helpful for Bitcoin. But ultimately, I do think that this cycle top is in probably for crypto. I do not see us getting back to 120, 125 anytime soon. I think 100K is probably very good resistance for the time being.
Excellent. We'll have to leave it there, but great to see you, Beimnet, and hope to talk to you again soon. You've been listening to Markets Outlook on CoinDesk.